You wipe credit card and student loans free, debt jubilee style. Just go like that, because all of it. I mean, I know the argument of, well, I took out loans and I pay back. So did I. I paid back my student loans, but it's literally on a Web 2 interface ledger that doesn't freaking matter. It doesn't increase, or it literally won't do anything economically. Charging 20%, 26% interest on credit cards is absolutely insane and should be illegal, or at least unethical, right? You've created a natural purchaser investor, and you've correlated the success of both simultaneously. The more wealthy and prosperous and peaceful you make the citizenry, the more capital the government has to expend on projects, services, and investments. That creates a symbiotic circle between capital and constituent that's never existed before. It already is the most pristine form of collateral. It's being recognized as it and utilized as it is a different thing, but it most certainly is. There's nothing like it. Like, unless you want to say fresh water, right? Fine. Like, okay, that's probably the most important asset on earth is fresh water. Like, or not probably, without a doubt. So, all right, next to that, we can say Bitcoin's the most pristine.
Hello, everybody, and welcome to My Two Sats. My name is CJK, and today I'm joined by Chris Sullivan of Hyperion Decimus, one of the earliest and best performing Bitcoin hedge funds in the world. Chris, thank you so much for joining me today.
Thanks for having me, CJ. Appreciate it.
So we have so much to dive into today, so much happening in the marketplace, but tradition on my podcast is, number one, for the audience, give a little bit of a background, and then number two, your orange pill moment. But for those who don't know, Chris has been around the block, so I know he's got more than one orange pill moment. So let's go with your original orange pill and then your most recent orange pill.
Yeah. Do you want background first, or you want the orange
background?
pill?
Yeah, let's hop background.
Okay. Background's like what I would call semi-traditional Wall Street. Started Morgan Stanley, had series 3, 4, 6, 7, 10, 24, 30, 31, 33, 63, 66, 215, CRPC, AWMA, CMT, MTSA. Okay, that's a bunch of stuff that apparently says I know what I'm doing. Orange pill moment number one, really I'd have to say, is Hayek. He says private money to come in via effectively subversion. That's really orange pill number one, is the consciousness that government money and or central bank money, because it's really not government money, is not real money. Fiat is not money. And I think that that's orange pill moment number one, because then that tees up orange pill moment number two, which is where I'm actually, playing poker in Costa Rica with my brother-in-law, and we have magic internet money, and it moves for literally almost free across the planet instantly. So that was really the first time I'm like, oh my God, I got to dive into this further. And that was 11 years ago.
Wow. 11 years ago. That's amazing. So would you say that there's a difference between money and currency?
Yes, I would.
How would you define that difference?
Money is a transactable form of labor. Currency is arguably fiat, like by decree, here's the instrument you're allowed to use by whatever jurisdictional laws you're subject to transact. And there is a distinction there.
Okay. And would you say that maybe one of the biggest differences, or one of the biggest differences in application between money and currency, is that money is a store of value and currency is more of a medium of exchange?
100%. Like, because for example, you and I might say, okay, I'm going to go fishing in Mosquito Lagoon, Florida. I'm going to catch 10 redfish, right? And it's going to take me 7 hours to do that. And then you might say, all right, well, I'm going to build you a new dresser that's going to have 16 cabinets inside of it, lights all built in, and that's going to take you 7 hours to build. And we're going to agree that the 10 fish are worth the dresser that you built me, and exchange those two things. One's food, one's for storage for clothes or whatever other items. Those have value, and therefore they store value, right? It may be subjective, right? Because all value is, but that's totally different than a piece of debt note, which is purely the medium for exchange, in my opinion.
I love that you brought it back to real goods.
Correct.
Because that's where we start. We start in barter, and money and currency is a technology to allow this bartering process to take place in a faster, easier, quicker way.
Exactly, CJ. Because like we have to put a price on time, right? That's time. That's where time preference comes in, and I know you know that concept, and that's where we can arrive at this for that, essentially for goods. And it's both a function of perception and need, right?
It's so funny because Michael Saylor just put a tweet out today about
who's Michael Saylor?
No. Fundstrat. Tom Lee went on CNBC and said, by the end of the year, Bitcoin's going to be over $100,000 because it's just a matter of time. And I commented and I said, what's funny is that with Bitcoin, time is your friend, but with fiat, time is your enemy.
Mm-hmm.
So choose your savings tool wisely. And I think I want to get down for my listeners to maybe what would you say is the root cause of that discrepancy between fiat currency and money or a store of value? And how has that system kind of been flipped to be used against us?
How much time you got, CJ? I mean, I think that's like a multi-podcast, a multi-episode series, and I'm happy to go there if you'd like to. But I think you hit the nail on the head with money used against us, right? The reason, so everybody listening should go to the St. Louis Federal Reserve website. They most of those statistics are close to accurate. They've got a loss of purchasing power chart. I actually showed it to my 11-year-old son last night. He's like, "Wait a minute, we've lost 40% of purchasing power in less than my lifetime." And yep. And it's like, and yes, it has been weaponized. Like most people, that's yep. That's just from 99.13% since the Federal Reserve came out. Now, the problem isn't necessarily the medium of exchange. Like, is the paper worth something? Or is a coin 90% gold or 90%? So whatever it's determined to have to represent N number of hours of labor, N number of goods and services, right? That's not the point. The point is that humans have allowed another smaller group of humans to conjure it and counterfeit it ad nauseum. This has then given inept, degenerate governments the ability to not go to the public to raise money for infrastructure, or most importantly, war, right? Since fiat, U.S. version of fiat, 1971, got all the way off the gold standard when Charles de Gaulle famously called bullshit on the central bank, saying, "I want my gold back, guys." "Oh, sorry, we don't have it. F off." Right. And Nixon does it temporarily. And we're 50 some odd years later. So
transitory.
Yeah, it's a transitory lack of backing by anything commoditized. Either, I mean, you could even do steel. The Spartans it was lead, right? So I think people just need to understand the history behind who did this, why was it done, and how has it harmed us? Because it hasn't enhanced anything.
Yeah.
Right. And the mechanism for monetary creation is different than credit creation. Both of those work against us because they're both diluting money supply, right? Making our current dollars worth less than they were a day before. And all of it is out of our control, out of our discretion, and without being voted in.
So what's so interesting is that money has that same problem too, right? Gold gets pulled out of the ground. Lawrence Lepard talks about this all the time. There's still inflation in gold, but the cost to pull it out of the ground protects us a little bit, right? Mm-hmm. So there's at least with money creation, there's a cost, and sometimes it's even a significant cost. But with credit creation, it's with the stroke of a couple the stroke of your pen in the old days, or the typing on the computer with a few keys for these banks in the new days, to the extent of infinity. Literally,
I literally bore witness to it, CJ. It's literally who has the authority to go bink. It's stroke. It's at least if they printed it like they did 70s and 80s, 50s, right? It had ink. It had some sort of textile input. It had electricity going into the printing press. Now it's literally point, click, boom.
Yeah.
And there's two ways to really do it. You've got the treasury bond issuance out of treasuries where either the Fed or the public or investors at large buy the bonds. That creates that money supply. But then you have the check writing ability directly from any of the 12 Federal Reserve banks. And we can't track it. And then, oh, by the way, why does the Pentagon fail all the audits? So it's just so insane that humans tolerate it. But it's just the same thing as like getting 7 booster shots. Like if you thought that by the 3rd you still needed them, then you deserve what's coming.
But people know that I am anti-vaccine because of all the adjuvants and how dangerous it is. So I know my audience will appreciate that viewpoint.
Well, it's just logic, right? You're anti-allopathic medicine.
Right.
First, I mean, understand the history. What are the inputs to pharmacology? 80 some odd % a hydrocarbon byproduct. Oh, is that because of Rockefeller? And then look at homeopathic and then look at naturopathic. Yes, please. Those are obvious choices. And, but as stupid as a stupid does, CJ, like you can't solve everything for everyone. People have to be awakened, be open-minded, and then be able to think for themselves.
Yeah. I've actually been referring to this period in time as financial COVID, because I feel like what we went through with COVID in the medical field is basically what is happening right now in finances, where the data is so manipulated, it's inaccurate, and then therefore you cannot make the right decisions because the data itself is manipulated at its lowest point. Like the raw data that comes in, like you said with Fred, all of that information is accurate. Yeah. And honestly, it might be the only thing the government can actually do successfully. Just collect all this data. Thank God they can collect the data and they share it with us because we have accurate raw data. But when you take that data and you plug it into a manipulative CPI equation that's substitution based instead of non-substitution based, and when you're doing other tinkering of these equations to alter the output to paint your narrative, that's when you harm people. And that's how people got harmed in COVID. So I want to get your thoughts on DOGE. How do you think Elon and Vivek are going to do? Is it going to make a difference? Can we start to reduce the deficit with their efforts?
I hope so. Look, I think as a contrarian bear, you actually know me for a good period of time. I'm a contrarian bear bordering on, what's the right phrase? I'm not like end of the world doomsdayer type, right? But I'm a skosh nihilist. Right? I think humans have been a horrible steward of the planet. And I think the ability that people fall victim to Stockholm syndrome, mass formation psychosis is just mind-boggling to me. So it just tinges me bare. So I preface with that to say that I think we have the most hope probably since Reagan in 1980, if not JFK in 1963, specifically before he was killed. And I think that if allowed to operate, I believe them with a 75% reduction in 2 years. That will unleash, literally you do something of that nature, you default on the Federal Reserve's portion of treasuries that they own, 8 or 9 trillion, give or take. You wipe credit card and student loans free, debt jubilee style, just go like that. Because I know the argument of, well, I took out loans, so I pay back. So did I paid back my student loans. But it's literally on a Web 2 interface ledger that doesn't freaking matter. It doesn't increase or it literally won't do anything economically. Charging 20%, 26% interest on credit cards is absolutely insane and should be illegal or at least unethical, right? So let's have a little bit of a jubilee and reduce the government by 75%, term limits, and then ban lobbying. You've literally fixed 95% of the entire problem that the entire earth has collectively. It will prevent them from having proxy wars, right? Like Fiat has allowed all the proxy wars where before we had to vote on. Yeah. So these things are all correlated. And I'm very hopeful that the right men and right business people are involved with DOGE. And they don't care. They'll just cut. Look, you're all fired. They should do it day one. You're all fired. Everything can operate. Look at the periods of history that we have where you have the quote unquote government shutdown. Did the grocery stores work? Did toll roads work? Everything worked fine. Yeah. COVID lockdown. Most of these government employees haven't even gone back to the office, CJ. All right, well, they're the first to cut, duh. So I'm very hopeful.
Awesome. I'm really glad to hear that, because we're in such a tough situation. And before I move to the next subject, you said something that sparked something in my mind, a couple of things actually. But did you see what the incoming Treasury Secretary said about the proxy war in Ukraine and the funneling of money through FTX and the attacking of crypto to hide all of that? Right? I want to hear it.
Well, I whistle blew this thing May of 21. So you already know that I know that. So yes, and yes, and yes. And you didn't have to be a forensic auditor of code to figure this out, right? So World Economic Forum got behind it, SEC got behind it, Forbes got behind it, all the lefty globalist periodicals push this. Well, and then you look at the trading of it and go, oh, there's a huge imbalance here. This is something not adding up. You put two and two together. Like I said, I've been a skeptic and a contrarian, and you can follow the wallets, right? And go, holy shit, that's robbing Peter to pay Paul. And, I got chastised for doing that real time. And people say, oh, you're just a hater. And sorry, I'm not going to be right all the time. I'm going to be right most of the time.
Yeah. I can vouch for that. Chris was way ahead of this, but it's amazing to hear it from the incoming Treasury Secretary. And it just makes you feel like, yes, we're going to get those right business people in those right spots, like you were saying, in order to come in and make the changes that need to be made, the cuts that need to be made. And it's just, I've never been so hopeful. And you know that I always say that the only difference between inflation and hyperinflation is trust, right? Whether you go to Rome or Germany, or it doesn't matter where you go, the catalyst, they try to mathematically define it, but there is no mathematical point that it's not the 50% that the textbooks say it is. It's trust. No. When that trust is lost, boom, we're gone. And I got to say, as somebody who, like you, has been on the side of, hey, we're going to go into hyperinflation. Like we're going to, this is the first like sigh of relief that I've had since I've been paying attention to this over the last decade, where it's like, wow, we might actually get some relief here. We might actually build trust. Like trust has been going down, 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 down. And I hope this isn't just like a little blip on the chart before we continue down, down, down. I hope this is the reversal point.
It's just, you have to understand, I would argue the tails, right? The right tail, right, is wildly bullish, wild Renaissance Enlightenment style period, but it's not going to come without pain first, right? There's going to be transitional risks. There's going to be corrections that have to occur. And then most importantly to it, there has to be legislation to back the will to those actions. And then we get fundamental long-term change. The sort of left tail risk is that it is just a bump of hopium, right? And we don't dismantle the authoritarian deep state. We don't interrupt or disrupt or decentralize the central banking authority globally, which is all countries of the world, sans 7 of them. And, we got to understand how the interplay will work between the two, right? Like if we just abolish the Fed tomorrow, stock market's going to crash. The bond market's going to disappear. Okay. Do I think that's a pain worth tolerating? Abso-freaking-lutely, right? Because prices don't really matter when we're talking about the future of humanity. Right. So that's my personal view as a historian and as an asset manager and as a father. So I just want your viewers to know that it's not a one size fits all, and we should be conscious and be able to articulate the factors on all sides of the equation here.
Really well said. Really well said. And one thing that you mentioned was credit card interest rates. And that kind of sparked my interest, because I've heard Trump come out and say that he wants to limit those rates. But of course, limiting or stating interest rates is price controls.
Yeah. So here's the difference, right? There's no market-based rate for those, right? Not high yield bond, not subprime auto, right? So what sort of market mechanics are you utilizing? Or CJ, is it pure usury, right? And to me, when you're looking at institutional style deals and how they get done, it used to be LIBOR plus, now it's SOFR plus, or you're benchmarking to the high yield bond index or the AGG. Like there should be not price controls via diktat, but some market-based mechanism for producing that interest rate calc. I mean, even my freaking Amex Platinum card, I think it's, luckily I don't carry a balance, but I think it's like 26%.
Mm.
Well, I don't have any debt. So why would I have to pay that much, right, to carry balance? So I just think that some ethical rebalancing should and could occur there to give people some relief.
Yeah, it makes sense because you really what you have to do is you have to look at the profit margin, right? Because if the profits are so high, then everybody and their mother is going to start giving credit out because you can profit that much. So you would think the natural forces or the competition within the marketplace would help bring those prices down.
Yeah,
But
and the reason that's not the case is the whole impetus behind that fee charge is dark.
yeah, I agree.
They don't care about the
yeah,
profit. It's not intended to be paid back. It's intended to pulverize the middle and upper middle class from ever attaining elite or upper class status. That's the entire point of interest rates at that level. And that's why, hey, you can run hundreds of thousands of dollars of balance at that level and we'll never call it, but you're going to be oppressed for the rest of your life by it.
yeah. Wow, and that's something where people like me, we need to make sure that we are also projecting our consciousness across that whole scale. It's not always economics. There are bad actors. There are powers that want to enslave us. There are powers that want to hold us down and limit our potential. And to them, it's more their goal is to get that power over us, not to make money.
A lot of the gaslighting is the narrative. Oh, follow the money, CJ, and you'll see who it is. Well, the people that are in control of that narrative are way, way above the follow the money. And oh, by the way, dude, they can control our print. So they don't actually give a shit about profit.
Yeah.
It's not follow. And that's what I've learned transitioning from, I'm 43 now, unfortunately. But, at 23, when I first started my career in finance, it was follow the money, right? And now it's like, wait a minute, you don't have to if they can print it.
Right.
And not only can they print it, they can conjure it in seconds.
That's
and
great power comes great responsibility, right? And those who shuck that responsibility screw us all.
Right, but they do it both ways, right? They will raise interest rates to do what? Oh, destroy demand. How do you destroy demand? You make people unemployed. What? That's your lever to fight inflation? That's a joke. That's not based on any fundamental macroeconomic or microeconomic factor. And then on the opposite side, we have to print to infinity. Either way, those are mechanisms of control and manipulation. Absolutely. None of those are market-based signaling.
Yeah, absolutely. It's unbelievable. And it brings up my next point where talking about tinkering with interest rates and using them as a mechanism of control, kind of, let's say, call it weaponizing the dollar, so to say. Mm-hmm. Trump recently came out and made this statement, which is basically, the BRICS countries are trying to move away from the dollar. We're going to require commitment from these countries or they're going to face 100% tariffs. And if you don't commit with us, then you can say goodbye selling to us. You can find different suckers. And any country that tries to do this can wave goodbye to our marketplace. So what do you think about this statement from Trump? Obviously, this is...
Yeah, I mean, I'm a huge fan of things like this, right? You got to put it in context, whether he's conscious of this or not, right? All right. Let's look at historical fact number one. That is that the primary revenue source, because guess what, ladies and gentlemen, income tax was not even collected until post 30s, right? So how did the country function? We had all the big bridges and all the big stuff happen well before that, right? So how did we fund that? We funded it through land sales and tariffs, right? Those were the two primary revenue sources for America. I'm all for tariffs. Now, what I would like the interpretation of this to be, to go on the opposite side of the spectrum, is that let's get into the ideas behind why they want to replace the dollar. Do they think that the American consumer is not going to consume? Do they think that we're not a good, faithful ally? Do they think that we can't manufacture stuff here? The actual answer, CJ, is they're abandoning the central bank's devaluation, the Western central banking system, right? And they're getting off of that into their own. So what I like that's possible out of that tweet or post is the dialogue behind what's the causation behind BRICS reaction. And I think Trump's conscious of it, obviously. And I think that bringing people to the negotiating table, stuff gets resolved, right? Yeah. We can't just weaponize everything. Should people pay to access the markets? Yes, both directions. If we're paying to send our goods to Brazil or Russia, they should be paying a consummate rate percentage wise or currency wise to access ours. That's what a free trade agreement should have. Now, do you blame them for wanting their own commodity backed currency? Absolutely not. And so I think this can work both directions. Better negotiations for trade deals, and then realistically a good dialogue on, hey, the world doesn't need central banks. Let's abolish them all.
Yeah. Well, that would be a great conclusion to come to. I know that he sent out those 25% tariff tweets about Canada and Mexico, and all of a sudden, they're like, "Hey, we're here to meet with you, man. We got to talk. We got to figure this out." And Mexico had the audacity to answer back and say, "Yeah, well, all your cruisers are going to get hit with a 40% tariff coming into our cruise ports and stuff." So it's like,
ooh,
yeah. Okay, yeah.
Yeah.
A couple billion versus a couple trillion. Like, who really has the bat here? You know, you have a paper straw and you're wavering as not the right tactic to take. But
right, and that shows you, CJ, the politicians reacted trying to be all high and mighty, and then what happened? Their constituents said, "You go back and you tell Trump you're negotiating." Like, this isn't rocket science. It's awesome. You know?
Yeah, it's beautiful to see it all at play. And I love that it's out in the open too. One of my favorite events that took place before the election was that fireside chat that Elon and Trump had. I hope that they do something like that, like once a week, 1 hour limit, give us an update on the progress of DOGE, and directly from the president's mouth, let us know how these negotiations are going, because that's what we need. We need some transparency here.
Well, I think Vivek, it'll be hard for him to contain any of that, especially if it's good, right? He's a very forward speaking human. And then I keep seeing that they might put Alex Jones as press secretary, which would just be insane.
I hope they do.
I mean, think of the meltdown from the so-called, I mean, it's not even left-wing media. They're a mouthpiece for the globalists. They're owned by the globalists. Yeah. So, you know, largely they're already immobilized. It's just we got to achieve a few milestones legally and legislatively first, and keep awakening the consciousness of at least Americans and hopefully the rest of the world quickly.
Amen. I feel great. Like, I feel super optimistic, and that kind of transitions into like this next topic I want to talk to you, which is the strategic Bitcoin reserve. So this is, to me, this is a game changer. I always viewed Bitcoin as like something that would crush the central bankers, crush the bad guys, so to say. Let's just call it the fiat system. But now I kind of see stablecoins taking away that fractional reserve business model, and then Bitcoin coming back and kind of backing the currency, allowing the currency to be a liability that's balanced by the asset of Bitcoin on your balance sheet. Do you see a future where Bitcoin actually strengthens the dollar versus fights against it? I think a lot of people in the industry create that it's either Bitcoin or this, but it seems to me that we might be evolving, and there might be a currency that is not used to abuse, but because it's backed by Bitcoin and it keeps them in check. Do you think we're trending that way? Or,
as I mentioned before, everything's always negotiable, right? I'm not a nothing's black or white, everything's gray. So, of course, is the short answer to your question. But my subjective view, I'm hypercritical of stablecoins. Why? They actually perpetuate fiat, allow for more shadow increase of money supply via Eurodollar deposits, because that's the mechanism behind funding stablecoins or quasi backing them. So I'm not a big fan of that. I think Bitcoin is a stablecoin. It should be the stablecoin. However, if you were to rein in the central banks and get rid of them, and it would be treasury, then treasury is effectively the people's money, right? You have, let's call it 30% LTV backing of Bitcoin, which may not even be possible at this point with how many trillions are sloshing around, but theoretically get to whatever percent, have commodity and land, maybe oil, natural gas, gold, silver, molybdenum, like lithium, whatever aggregate collection of commodities that are onshore to the United States to, let's say, back 50% of the dollar. Yes, you could achieve a strengthening of it and a further use case for stablecoins all over the planet.
Being illiquid, and most of it taking years to make liquid and bring to market. But basically the idea was, look, we got the asset side of our balance sheet is $500 trillion. We have $35 trillion of debt, and we have about $219 trillion of unfunded liabilities. So am I starting to get concerned? Yeah, a little bit. So I want to get your take. Where do you think the United States asset side of the balance sheet is? And what portion of it is actually liquid that would make sense to back a currency in case there was a run on the currency?
It's really that there's nothing on the balance sheet of the U.S. government. It's all on the balance sheet of the U.S. taxpayers. So, 500 trillion, 400 trillion, 700 trillion, carry the two. It doesn't fucking matter, like, period. What does matter is we can wipe out the liabilities. No one is owed any money.
Yeah. I do want to interject there too, that Chris this is why I love Chris. See, number one, he makes you laugh, but number two, you always learn from him. What I did was I just applied a slave mindset. I just said, what does the U.S. government's balance sheet look like? And he properly corrected me and said, there is no balance sheet. It's we the people. It's we the people. It's our land. It's our resources. The government is a middleman. The government is there to do the little bit about our work. And even in my mind, I'm a freedom maxi, and I still have that brainwashed idea into my mind. So thank you for calling me out on that. And thank you for helping my listeners remember that we, the people, are in charge, and that those government employees, they work for us, and these are our assets, and we need to make this system work for us. And we have the ability to do that now with Bitcoin.
Like there's a couple, the quick fixes I mentioned before that the guys with DOGE can do, right? How do you fix Social Security? Easy as shit. And they would have done this. Like this is to show and highlight the weaponization of all of this. Why? Let me just ask it in questions. All right, the average person, let's say, puts 500K into Social Security, pays in 500K, right? And let's just call it a 25-year-old to 65-year-old paying, 40-year paying. You know that at 4.5% return every 10 years it doubles, right? So why not ladder 2s, 10s, and 30s, monetize treasuries, right? Put that account in a treasury bond. It's already allegedly a forced savings until Obama stole all the money out of it, right, in 2012. But let's recapitalize that and let's put it in treasury bonds. My vote would be to say, okay, so that means by the time I get either 65, 67.5, it's going to have 4x'd. So that 500K becomes 2 million. And then I can take a 4.5% distribution out of that based on the coupon of U.S. Treasury yields, right? Okay. Then I'm getting 90K a year. Okay. That's way better than the 3,800 maximum, whatever the hell the maximum is. And then CJ, can I also vote to get a principal remainder where I can gift it to my heirs to ensure that I'm then creating a literal Social Security safety net for every U.S. American everywhere? Look at that. Every single payee can create keeping out of poverty wealth transfer forever by using our own money to monetize our own bond market.
Wow. We need people like you who are forward thinking. And I actually did a deep dive on this. I'm sure you've seen this before, but I want my listeners and new listeners who haven't seen it to understand what Chris is talking about here, about the criminal mismanagement of Social Security funds. And in 1983, of course, they went from non-substitution to substitution-based CPI. So you can see the immediate drop in CPI versus using the 1982 CPI, the non-substitution-based CPI in red. And what's amazing about this is because people ask me all the time, Chris, they're like, well, why would the government do that? Why would they take the accurate raw data and manipulate it through an equation? What's the incentive? Well, one of the incentives, a very big incentive, is Social Security. Because if they never changed from a substitution base to non-substitution, or from non-substitution to substitution, then the average Social Security payment today would be $11,400 a month based on the cost of living adjustments. The average Social Security payment today, based on the substitution-based CPI, is roughly $1,800. So you can see this is highway robbery. This is, in my opinion, this is a national economic emergency because it's mismanagement of funds. It's I don't know what the legal term for it is, but this is
Fraud.
not right. It's fraud.
Fraud and racketeering.
It's fraud.
Racketeering.
Absolutely.
Right?
Absolutely. And
So
these are the
numbers manipulation is the fraud, and then the theft of the capital is racketeering.
Yeah.
And
that's what we're watching here.
Folks, you should be calling your congressmen and women on this like immediately. I've already done that. I've raised this, and I will continue to raise as much hell as I possibly can. But if we come to consensus that, hey, let's provide a social safety net and call it Social Security, the very simple investment plan that I laid out benefits every single human equally, while also allowing liquidity management flows to the treasury markets instead of worrying about China buying it or Europe or Russia or blah, 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 right? Or the Federal Reserve having to buy them, right? You've created a natural purchaser investor, and you've correlated the success of both simultaneously. The more wealthy and prosperous and peaceful you make the citizenry, the more capital the government has to expend on projects, services, and investments. That creates a symbiotic circle between capital and constituent that's never existed before. Literally, Andrew Jackson was the only one to briefly accomplish that in our history. And then if you go empire to feudal monarchy system to central bank, never once did that occur.
Yeah. Well, and that just highlights exactly how this system is being used against us, because your solution is a fantastic solution. We have a solution here at People's Reserve with Bitcoin bonds. There's so many things that could be done, and it just shows like the lack of action being taken. It goes right back to that fraud and racketeering.
They're criminal.
It's criminal.
And it's designed to create class warfare. It's designed to pulverize people on fixed income. I could literally riff for hours on the motive behind doing it. And the good news is, like, we go through a couple of years of corrective pain to solve for these, and then we never have to worry about it again because we lock it into blockchain. It's truth serum cubed, right? And then these cucks and criminals and Bolsheviks and communists and treasonous losers who have been in control of our system for a long time can't do anything about it.
Yeah. Yeah, it really is. It is like a sword of truth that just cuts down their lies. And it's so important to make that transition. Now, when we think about that type of transition, that some people would say that's far right, that's good. That would be like best case scenario.
How is doing good far right?
Yeah, I don't know. These people are crazy. They don't even know if they're men or women. So,
but let's just stick with the Social Security thing. Well, they don't know which bathroom to use, which I just have sympathy for, to be honest. I don't want anybody to have a mental illness or be confused about who or what they are. But by all means, you have my blessing to do whatever you want that doesn't create a victim. Right? So that being said, solving for, hey, we don't want anybody to be poor, right? I thought that's why they did this in the New Deal, right? Well, how many homeless are there? And then we have no border. There's so many solves that will come tangential to, let's create a badass portfolio of Social Security. I've already paid in over 7 figures. Is it fair to deprive me from either giving that money away or having my kids inherit it? No, there's nothing fair about this. And it doesn't provide for shit. It's a weapon. That's what it is. Medicare and Medicaid and so-called socialized healthcare are weapons. They're not services.
Yeah. Now, if DOGE gets in there and deletes the entire government, just the whole damn thing, the problem is that those promises of payment, Social Security, Medicare, Medicaid, also net interest and military, the sum of that cost still creates a budget deficit. So do we have hope? Like, how much good can come from a successful DOGE campaign?
And there's going to be write-downs, dude. And then you just transfer you take it off the liability and you stop collecting it.
Yeah. Now, if you could stop it, that's the kicker, because that stops the growth in the unfunded liabilities. So now you can start to correct the
right. It's just an illusion any damn way.
See? Yeah. Like, now, speaking of illusions, you mentioned when we talked stablecoins, Eurodollars, and I want you to dive in a little bit more to the Eurodollar system and how it plugs into stablecoins and credit creation and really exactly why the Fed is not in control of interest rates. I think my listeners will enjoy this breakdown.
Yeah. So let's define what a Eurodollar deposit is, or what a Eurodollar is. That's a USD denominated outside the US banking infrastructure. The Fed cannot control that, right? And vis-a-vis, the more that's on that side of the equation, the less influence they have on their side of the equation, logically. And let's analyze how this has affected the market. Well, from 2009 to call it 2014, 2015, and really even into 2018, Bitcoin was how you moved throughout the infrastructure. There was 6, 7 coins all the way through then, right? And what it has done is it's withdrawn capital that would otherwise have gone to Bitcoin. Still have meme tokens. So this isn't a solo analysis to stablecoins, but they've kind of transposed a fiat system inside of crypto by allowing that poison to enter the system. Having critiqued it in that sense, is it absolutely frictionless so-called USD that's able to help people that don't have access to banks and stuff? Sure, but I'm pretty sure Bitcoin was designed to solve for that mostly. And then, okay, let's speak facts. Once that fiat has then come into the crypto sphere, does it even matter if it's backed? No, it doesn't, because it's just math, right? That's on the blockchain. So in that sense, is it bringing more participants, and is that a net positive thing? Sure. So you can't look at things diametrically opposed. You have to weigh the evidence of both good and bad factors and appraise it for what it is. And I think there could be a harmonious relationship, or we could just get rid of them, and Bitcoin is the collateral. So I'm not the one that's going to answer that. That's for the market to decide.
Right. Now what's interesting is I'm sure you know Jeremy over at USDC at Circle. He recently came out and he said 2025 will be the year that the world fully wakes up and begins actively using the internet financial system. Now, I think that was interesting because
they already do, Jeremy.
Yeah, that's exactly what I ended up saying in the quote tweet. You know, there's many different financial systems, centralized and decentralized, that all communicate over the internet. And the thing is that at the intersection of those systems, I like to say we've created the internet economy, a marketplace of true free market interest rates. No one would know better than you, being the professional forwards trader that you are with Bitcoin settled contracts. So I would like to, just for our audience, have you expand on the real idea behind what Jeremy is saying, which isn't just based on USDC, but based on the rates that you trade on and these free market interest rates that are just better than price controlled TradFi rates.
Yeah, I think if I were to rewrite that for him, he really means DeFi, right?
Yeah.
And what does DeFi mean? It means humans determine the price with which they transact, right? And to your point, to speak to forwards, what are forwards? They are a bet on a future price of a thing, right? In Bitcoin's case, because it is a commodity, it is a bet on the price. Now, who needs to trade those? Well, certainly miners, right? Because they have somewhat of a variable input cost, even if they're negotiating their kilowatt hour costs, right? They've got staff, they've got HR, they've blah, blah, blah. So they're a bona fide hedger, and they need a speculator to take the other side of that trade. And they agree on what we think a price will be. What are the factors that go into that? Hash rate's one of them. Kilowatt power cost regionally and globally are one of them. The skew of the options market and futures market. Like, okay, if perps are like at 100 funding and right, and CME futures are at 20, right, that forward's going to be more expensive, right? And what does that mean is that the market and willing participants contract to make that forward and decide on what that rate is, not from dictation from a central bank or government. And that's what a functioning decentralized market achieves, not one that's a command economy. That's this quasi-communist, quasi-socialist market that we've been dealing with, unfortunately, you and I, almost our whole lives.
Yeah, that's one of the reasons I'm so passionate. People know me as a Bitcoin maxi, but in order for Bitcoin to be the most pristine form of collateral in the world, it's not just about barter. It's not just about a technology
it already is
barter.
the most pristine form of collateral. It's being recognized as it and utilized as it is a different thing, but it most certainly is. There's nothing like it. Like, unless you want to say fresh water, right? Fine. Like, okay, that's probably the most important asset on earth is fresh water. Like, or not probably, without a doubt. So, all right, next to that, we can say Bitcoin's the most pristine asset.
Definitely. It's exciting to see it taking place. And to me, I think Jeremy is saying this, he's telegraphing exactly what you just said, gearing it towards talking his own book, of course, but the transition is here because the incentives are there.
Right? Like, who does USDC who does Circle use as a bank? Goldman sucks. Bank of New York Mellon. Do they own shares of the Fed, CJ? Do we, I'm just a little bit skeptical of the motive behind those types of participants. But,
absolutely. Definitely, to me, a complete co-opt, because they see the people who are working with them and banking with them and using their magic credit extension tools are now wanting to apply those tools in the decentralized internet economy.
Well, then walk me through how USDC collects revenues.
Yeah, exactly. And this is this is so important. So okay, sorry, go ahead. No, please go.
It's one thing if I'm paying gas fees on Ethereum to swap, or I'm paying a Bitcoin hash rate or node cost for confirmation on the network 10 minutes later willingly, right? It's a whole different ballgame where I'm setting up effectively a usury engine, which is literally all stable coins. Yeah. It's just so small, you don't really notice it. And I just hate the lack of transparency. I think, truth can be painful, but we can all handle it. We all should embrace it. And from that, we can achieve a lot better policies and outcomes when we're dealing with pure facts.
Absolutely. I've come to call it custodial arbitrage. I mean, you're giving them your dollars. They earn with those dollars and the cash equivalents, and they give you nothing. That's the best freaking business model in the world. If you want to rip people off.
Complicating your dollar deposit. Yeah. And it's no different than your checking account at B of A or Goldman, where you get 15 bips while they get 440 bips.
It's horrible. But the power of the free market and the power of free market interest rates that aren't stated from a small group of men who are trying to manipulate the market and exert power over certain classes of people actually brings better opportunity. So that kind of brings me to my next topic. I want to bring this up. I want to get your take on, now, most people look at the 10-year, 2-year yield curve. I found that the 10-year, 3-month tends to be a little bit more accurate. As you know, the 10-year, 2-year is already normalized. We're still not normalized on the 10-year, 3 months. So this is the longest inversion we've seen in the history of the relationship between the note and the bill. And I want to get your take on how much longer do you think this is going to go on? And I also want to get your take on which way the spread is going to break, because typically the spread between the 10-year and the 3-month is between 2 to 4%. So right now, with an inversion, if we were to normalize and get that bear steeper,
10-year has to rip, which is what's going to happen. Yes.
Rip. Okay. And then the other side is, well, or they could lower the front end. So they could drop the front end to 0 or 2.
They really can't, right? Like what this shows and highlights, CJ, is despite all the commanding of these worthless SDE central bankers, they've broken the markets and they no longer can pull down. Like, can they get the front end to 3? Yep. Does the back end go to 7 or 8? Yep. Is a 3 to 8 curve nice? Yeah. Okay. So it really is like, what sort of normalization do we expect? I would argue it's not going to happen smoothly because it just never does. Right. But I definitely am trading with a bear steepener mindset. Doesn't really change how I look at digital assets, which all of the so-called rate correlation is bullshit. Like, lowering rates is horrible for the velocity of money, which is horrible for all investments longer term. Higher rates are better.
So if we got a spread of 2 to 4, and we'll just, for the sake of math, we're at 4.5 on the front end. So that implies 6.5 to 8.5. Where do you, is that the range that you would say?
Yep.
Okay.
So then the chart's calling for it by end of Q2.
Yeah. Now what's interesting is I had a chart out there. Actually I took a lot of flack for this chart because well, thus far it's been wrong. I'm going to pull it up right now. Thus far it's been wrong, but we've made a few surges. So as you know, they raised rates starting in March 2022, and we made a surge up to that 433 level. It was a huge rejection of people, I guess, just front running, big players front running. And of course the comedy in all of this is that they were raising interest rates to secure the system. But as they raised interest rates, they lowered the value of the underlying collateral of the whole damn system.
And they know full well every panic has been caused by central banks, and it's been either a pull of liquidity forcefully, like they did in 1907, 1929, where they arbitrarily raise a broker call overnight loan rate to 100%, right, and blow up everybody right in front of their face, which they can still do now, by the way. Or they do it under the we got to tame inflation, blah, 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 by putting people out of work and destroying demand. Also insane, right? It's like this weird type of evil alchemy where they've convinced people via the talking heads that do the lying for the globalists that this is the way things are. No, not the case. That chart is, you're able to do both directions pretty hard before getting on the longer term trend, which should be, right, the natural rate of interest somewhere around 600 bips, going back 20,000 years of data. I literally have looked at some semi-accurate, we'll call 15,000 years of data. It's around 6%, right? Mm-hmm. So plus or minus is how you're going to get there. And that'll be hopefully achieved by market forces. How I believe it's likely to be achieved is by the bond market blowing up.
Now, would the Fed let that happen? Because that will make them break their mandate of stability. How
has the Fed ever caused stability? They've
Never.
Only caused so
never. Yeah, I always like to say, and I called it out from the beginning. Actually, Max Kaiser and myself were quoted in Forbes for saying this, because if you they're stuck. It's the debt spiral. That was the quote. But basically the underlying peels of the onion were, look at Venezuela. You can destroy the economy. You can reduce demand to water and food, and prices still go up because the source of the inflation was not the economy. It was the abuse of the currency.
Always. So inflation equals increase in money supply. There's no other definition. Let me impart this Scotia wisdom to your viewers. Costs never, ever in history have gone up. It's only purchasing power that have gone down. Nothing costs more. It costs the exact same. And I don't give a shit if they want to challenge me on this. Go fuck yourself. Look this up. This is such you got to understand this. An ounce of gold bought the exact same thing 2,000 years ago, 5,000 years ago that it buys today. Literally the exact same thing. Costs stay the exact same. It's the value of the purchasing instrument that goes down.
Yeah. And my listeners are actually very familiar with that topic because they know that we've created govflation, which I'm not sure if you've actually seen this yet, but I know you're going to love it because
I do.
We have, of course, have the masked Uncle Sam with his telling us exactly what the headlines are. And then the govflation data, which of course is not proprietary like Trueflation with their own interpretation. This is just going back to that 1982 non-substitution based CPI. It's all government. It has nothing to do with they financed that equation. They figured it out. It's been the most accurate form in my opinion. But what you were just saying with the difference, the problem is look at what happens to the real return. Like you just said, it's the costs aren't going up. It's the real return on your investment going down. And right now, if you listen to the government, then you would think, oh, by the end of the year, I'll be able to buy 2% more stuff. If I have a 4.5 to 5% treasury bill paying me yield at the end of the year, because inflation is 2.6, I get to buy more stuff. But in reality, inflation is above 10, and you're buying almost 6% less stuff, right? And the costs are going up by 6%. But they've never gone up because, like you said, it's just the natural laws of price discovery.
It's just you're losing purchasing power. You're not. It's not costs are going up. It's just you're losing purchasing power.
Yeah.
And
Now,
that is the legacy of central banking. It's not won by chance, ladies and gentlemen. It is won by force and by intent.
yes, absolutely. Now, this makes what Michael Saylor doing a little bit more interesting, right? Because some people will refer to it as financial engineering. Some people would call it a speculative attack on US dollars. I wonder how you define what Michael Saylor is doing over at MicroStrategy.
I mean, there's a lot of ways to skin that cat. First, I think it's absolutely hilarious. He's using the system against itself. So in that regard, I admire him greatly. And if someone's going to give me free dollars to buy Bitcoin, how the hell am I going to say no? I do think we got to be careful about the fiduciary rules for shareholders, right, and ensure that these converts don't over dilute. But so far, I've seen it's been super transparent. So I'm a big fan of what he's doing. I think there are others who buy back stock and self-liquidate the company. Instead, he's transparently issuing more shares to follow a very simplistic, as far as understanding the investment plan with those dollars. And people are, paying 3.4 times per Bitcoin that they're buying by buying MicroStrategy shares. So again, I'm a free market maximalist. This is very transparent. It's legal and kosher from that perspective. So while I don't think I could handle dealing with Wall Street to the degree he has to issue these converts, more power to him.
Yeah. What I really like about it is because on the personal level, obviously you don't want to pay more for your Bitcoin. The goal is to accumulate as much Bitcoin as you possibly can. Therefore, you want to receive as much Bitcoin as you possibly can per each dollar invested. So for that reason, it makes sense to have your own personal stack. But what I find so amazing about this is it reminds me of Soros' attack on the Bank of England, but nobody could participate. He was the only one, he made $1 billion. But in this case scenario, we, the people, kind of get a way to participate, especially for those people who are still working and they want to get their contribution to their 401k matched. Yeah. If you're retired, you get your self-directed and your keys, your coins, no problem. But if you're still contributing, you want to take advantage of the match. This is a way where that Bitcoin yield that we're talking about, the amount of Bitcoin that can be claimed per share actually grows over time. So even even if I am diluted, hey, I have a corporation here that is leveraging its access to Bitcoin.
Right. It's math in the right direction, as I was pointing out, because like if you look at, let's say, Apple, right, where their share buybacks like 30 billion a year. Well, guys, they could have bought the entire Russell 2000 by now. Like, what the f are you doing not investing our shareholder equity into something productive? Oh, we're just going to engineer it to go up a few percent a year. Like, what good is that, man?
Yeah.
Like, invent something.
Hundreds of billions of dollars, right? Between Apple, Berkshire.
I don't know the exact. I know it's over 20% of the market since the financial crisis has been bought back. Which, why would I want to invest in something that's self-liquidating? That's insane. Now, of course, it's to pump the share price artificially. And look at what he's doing, the inverse of that, and pumping the Bitcoin yield per share non-artificially, like as transparent as possible. So, like I said, good on him, and I'm a super big supporter of that. I just have a little bit of hesitation to the cluster efforts he's dealing with to issue those bonds.
Yeah, it's going to be tough. I know at People's Reserve we also have a Bitcoin bond coming early next year, and our company would have been live already if we built offshore, but because we decided to build here in the United States, and I'm so glad that we did, because there's going to be a lot of benefits coming our way with this swing of the pendulum. But it's proof of the pudding that they use regulation to keep out. We talked about competition in credit cards. They're going to regulate you out of becoming competition so that they can state the rate and take advantage of you and hold you down. So it's not real free market. Really isn't free market when it's not a free market. And unfortunately, that's what we're having to deal with. And the last topic I want to get into you with, Chris, is people don't understand. Probably most of my listeners have never heard of Hyperion Decimus, and they don't understand that you are one of the earliest and best performing, most successful Bitcoin hedge funds in the world. So I want to leave you with the last word to my audience. Please give us 2 or 3 tips that are going to change our mindset.
Just a tip.
Just the tip. I want to go deep. I want to go full deep on this one. Three good ones for my listeners. And guys, look, you don't just listen to what Chris says. You study what he says. You are about to learn alpha from him right now. Chris, thank you.
Yeah. So nothing. I'll give 3 pearls of wisdom is what you're asking for your folks. Yeah. First is be humble and be patient. And how you do that is preemptively accepting you're going to lose, right? The best athletes in the world are not only physically and genetically gifted, but are the ones who know how to learn from their losses the best. Same is true, not just in all of life, but certainly true in investing. So just accept that there are going to be losses along the way and they're going to be beneficial to you. Like that's just how it goes. Effectively, I'm saying don't be emotional, but humans have a hard time doing that. The second thing is to really think of your portfolio as infinite time horizon. And I like to simplistically divide into 4 quadrants. You've got cash flow, asset protection, trading and speculation, and accumulation. Now, some asset classes, like Bitcoin, for example, can fit all 4, like real estate, certain piece of real estate can fit all 4. But just thinking in those quadrants and place not just asset classes, but strategies assigned to fill those silos, and you can't F up. And then third, just try to do whatever you can to destroy anything centralized. Evil spawns when things are centralized.
Absolutely. Wow. Guys, I cannot tell you the value. He's years and years of experience and extreme success. And the man is telling you to learn from your failures, to not look at one number of net worth, but to break it down into the quadrants in order to protect and grow your wealth. And finally, to reject the fact that we are slaves and that we are in control. The government works for us, and we are going to take the power back. We are going to decentralize the future of finance. We are going to decentralize money, and that is going to protect us moving forward to build a better and brighter future. Chris, thank you so much for joining me here today. It was an absolute pleasure and honor to have you. I hope we get to do it again. Let's come back when things start getting very emotional, right? When we get into that euphoria phase.
I'm looking forward to getting more spicy here. I appreciate you having me, man.
Absolutely. Well, one last saying goodbye to the people, where they can follow you, where they can learn more about your fund.
So we're super private, as most worthy private funds are. HyperionDecimus.com is a webpage. We do have a Twitter that's loosely monitored by our compliance and operations team, not run by me. And I am on LinkedIn. I don't even know what my handle is. So I'm not very good with self-promotion or social media, but LinkedIn is the only place I will attend to personally. But you can visit the website, email us directly from the website. Any questions, we're happy to help when we have time. And want to make sure that everybody knows that people like us are the opposition to those that you've read about. Like, there are good hedge funds. Why are we called a hedge fund? A, we're private, and B, we fucking hedge.
There you have it, guys. And I'll throw that LinkedIn description in the description under the video for you to connect with Chris. Chris, thanks again. And I look forward to doing it again soon.
Cheers, buddy. Thank you.